Time next for the business news with Cole Stangler. Good evening, Cole.
Donna.
Global stock markets deep in the red this Monday.
That's right. Some have already calling it Black Monday is what they're calling it. Fears over the coronavirus continuing to weigh on global markets. Wall Street with its worst day since the financial crisis of 2008, fueled by a nosedive in oil prices. We'll get to that in a moment. For now, though, let's take a look, though, at the figures. Red across the board here in the U.S. Trading was even temporarily halted shortly after the open. So-called circuit breakers designed to cushion losses taking effect. Since then, though, the Dow Jones did even worse, actually finishing the day down nearly 8% there. Its worst drop in points, meanwhile, ever. The S&P not far behind, finishing the day down about 7.6%. Interest rates on U.S. government debt hitting all-time lows as investors turn to safe assets. European shares with some heavy losses earlier in the day there. The FTSE losing more than 7%, 7.7% almost, now at levels not seen since the Brexit vote in 2016. CAC 40 and the DAX both shedding around 8%. Shares in Italy were down even more, around 11%. Banks among those hardest hit by the sell-off here in France: Crédit Agricole, BNP Paribas, and Société Générale all seeing steep losses. Now it's all as oil prices are seeing their biggest one-day drop since 1991. So you can see here just massive losses. Brent Crude International Benchmark down more than 26%. So it's about a quarter just in one day. Now trading at less than $34 a barrel. That's due to a price war involving Saudi Arabia and Russia. Riyadh slashed prices over the weekend with apparent plans to ramp up production. Move that came after Moscow rejected deep production cuts last week. Now, earlier we spoke with Toby Gibb, Global Head of Investment Directing at Fidelity International. He suggested the volatility isn't going away just yet.
It's going to be a little while before we get the Russians and the Saudis back to the negotiating table. Usually, it will be a course of a few months before that will happen. So, I think that could be certainly volatile for some time to come. But as we know, the sort of the break-even rate for both Saudi Arabia and also for Russia is well north of $50. So it can't stay below that level for too long. On the demand side, there's a huge amount of uncertainty there. I think, as we're seeing over the last few days, it's proving very difficult to sort of curb the spread of the coronavirus, and I think that is likely to continue. I think what we're seeing is the market now trying to discount the likely impact of the further spread into Europe and into the US, and the potential for similar sort of a similar situation that we're seeing in northern Italy to impact other parts of Europe and potentially even the US. So the market's starting to discount that, but again, I think there's still some more volatility to come.
Meanwhile, here in France, the country's finance minister unveiled a slew of measures designed to support the economy as worries over the coronavirus mount. Kamil Nedelek reports.
France is bracing itself for the economic fallout of the coronavirus, which the government warned will be severe. It unveiled a raft of new measures aimed at supporting French businesses struggling to stay afloat as consumers stay at home.
We have a recovery plan that will include social and fiscal measures that should allow us to revive economic activity quickly. At some point, we have to get the machine going again. And it will be a moment of truth for the European Union. There's only one strategic objective: it's to restart the economy.
Companies will now be able to apply for an extension on the social contributions they need to make for each employee. And those on the brink of bankruptcy due to the outbreak could even have their taxes cut or waived outright. France's Public Investment Bank will provide financial support to small to medium-sized firms. And the process of switching to partial unemployment to avoid job losses will be simplified. Some 900 companies have already asked for the measure to be applied to a total of 15,000 employees. Some sectors have been hit especially hard, with caterers seeing a 60% drop in business. France and Italy are both also calling for Europe-wide fiscal stimulus to mitigate the impact of COVID-19. Analysts warn the global economy is headed for a harsh downturn.
Louis Delano goes beyond just the French and Italian governments. The International Monetary Fund today, on Monday, calling for, quote, substantial stimulus, cash transfers, wage subsidies, and potentially tax relief. So we'll have to see how governments respond to that.
We'll see what happens in the coming days and weeks ahead. Thank you very much for that, Cole. Cole Stangler there with today's business news.